I also want to point out Intel. This on Friday was something interesting. It's just a random stock. I forgot to add it into my video, so I'm just adding it in after the fact. But basically, Intel, you can see here, big red candle right here, big breakdown candle. I took it short as it was breaking down. So the thing is that there's always stocks going against you. There's always stocks going for you, even when you're in a swing trade or a trend. Some days they go against you, some days they go for you. But when you look here at the weekly on Intel, this is the thing I want to point out. Intel is possibly entering a bear market. This is your 2009 lows on the weekly. And you can see, so this is your bull market in Intel stock. And, it was an upward price channel until recently it broke that upward price channel. You can see here, there's your breakdown. 2 impulsive weeks breaking down. And then what they did is they did this kickback rally where this week where they closed it back above that support was very bullish in that moment because it made this look like a bear trap. This breakdown, this trading, and then it recovers. Completely looks like a bear trap. But you can see the weekly close this week is actually giving you a different picture. And so to me, it looks like this is the start of a bear market in Intel. And you can see, the next 2 weeks, we've already broken back down below that support line. Let's go to the daily here. You can see there's your support line where it was holding. It held the support line down here for, all the way since 2009. Recently broke down. We had a back test, and then here's your daily close. That's impulsive too. So that's an impulsive sell signal. Look at the volume on that thing. So big impulsive selling in Intel and a big breakdown. I don't know what that was, whether they were selling Intel to make room for Tesla in the S&P 500, but big impulsive volume, big red candle. That's a breakdown. That's what you want to see when you have movement around major trend lines. You want to see market consensus, and that is what that is. So I took it short. To me, it looks like Intel is heading much lower over the next weeks to months. And so first line of support, I think in Intel is, well, you got a little bit of some support right here. So we're likely to get a reaction down in this area, the lows basically, right in here. And that, these are your COVID lows. I think, yeah, there's your COVID lows. And we're already heading, we're already almost halfway back down to the COVID lows. And so a drop of another 8% or so, and we'll be down there. We'll probably get some support, bounce around, maybe head up and tag the trend line again. But the point is, another 8% down, we'll find support. And then we've got another major level of support down here at 38.25. So if we break through the lows, which I think is likely, to be honest, then we should have some major support down here at 38.25. And that's a drop of about 20% or so. So I took that trade short Intel. And I like it. Looks good. Okay, welcome everyone. So we're going to go through the stock charts, really try to point out what happened on Friday. And then I'm also going to go into some of the financials and bank stocks. We'll look at a couple of the big banks. The Fed came out Friday afternoon after the market closed and said they're going to allow the banks to do share buybacks again, or at least they're going to allow them to do it for the next quarter. So we're going to look at that. What does that look like on the chart? For many people that have been following this channel, I'm short Citibank. I just recently shorted that. So obviously that will go against me. That would gap against me on Monday. But does that mean that necessarily my short is dead in the water and I should cover my short because of the headline? So we'll look at that. Let's start out here with the NASDAQ futures. But before I get going, leave me a thumbs up if you guys find some value in the content. Again, I don't get all the trades right. Don't expect me to get all the trades right. But if you're finding at least some value in the analysis, then leave me a thumbs up. All right, so here we go. NASDAQ futures, all right, so I pointed out in my Friday morning video that I was looking for this trend to break, or this support line about 12,675. And you can see what happened. It did break, but then in the last 20 minutes, basically, they popped it back up and it was just like a straight up ramp. I don't know what that was, whether it's the market makers or the plunge protection team or whatever that was, but clearly didn't get the close in the didn't get the breakdown that you were looking for. So what I did, or how I was trading that, is here's my triple Qs trade, and the trend line that I had breaking was this 309.44. I was looking for that to break and get an hourly close below there, and really for the selling to increase. But again, the thing that I want to point out, if I go to, let's look at the 5-minute chart, and I want this to be just a lesson that I think is important to know. When you get breakdowns late on a Friday, and that's what this was. This was hanging in there all day, and then late on a Friday, into a holiday week the next week, and you've got a breakdown late on a Friday. You've got to be suspicious of it, and that is what I was. I saw the breakdown start to break, but it wasn't very impulsive either. It was just kind of moving lower. You didn't see those big red heavy candles. You saw a steady decline over a period of 20 minutes or 30, 40 minutes, and then in basically the last few minutes of the trading day, it was just this huge ramp up, closing back above that resistance. So clearly that trend line is valid. The other people were watching that, and they didn't want it to close the week below that trend line. So that is something to watch. And I mentioned the other day I covered my triple Q short because I was looking for, this was continuing to grind higher, and I went ahead and stopped out for a small loss. But I was looking for another sell signal. So I'm not going to get long the market. I don't see longer term. I don't see reasons to get long, this market. I think there's going to be more money to be made on the downside in the future than there will be on the upside. The easy money on the upside, I believe, has been made, and now you're in just kind of the mania phase where everyone thinks that the upside will never end. So we'll let that kind of run its course. But I am looking for another opportunity to get short. The key here is, I'm looking for short trades. I think that there's more downside than upside, and I'm going to stick with that until going to the SPY here. Let's look at I'm going to stick with that thesis until, and here's the weekly chart, until we recover this trend line here on the bull market. So this is the S&P 500. This is the bull market, basically, that this was in since 2009. We're looking at a weekly chart here. We broke that bull market in 2018. We had a back test, basically due to the Fed, in 2019 up to 2020. Then we fully back tested that trend line, had the COVID drop, and then the Fed stepped in again, creating another back test. So maybe they want to push it all the way back up in here. Maybe they want to recover it with a 1 or 2 week close, and then it fails. But I don't think it goes much beyond that. So until it goes much beyond that, I don't want to be short a trend line that has been validated several times over the last 12 years or so. I don't want to be short a trend line that's been validated right when we're near that major resistance. I'm sorry, I don't want to be long. I don't want to get long right at the very end of a potential, of this potential move right into major resistance, and then it sells off. So I'd rather look for short opportunities, and I'm going to continue to do that until this technical posture changes. We also have big negative divergence on the weekly. And really, if you go back, I've pointed this out in the past, but if you go back and look at the past when we had negative divergence on the weekly, let me go ahead and point those out. Here they are right there. So I'm going back really to 1995, and this was the 90s bull market. We started to show negative divergence right about here on the weekly. And then obviously the trend wasn't broken, so it continued to be in an uptrend, and it went up another 30%. And then you had a bear market. But when the negative divergence showed up, it was telling you that there was a bear market coming, and that look for a trend break. And then we also had negative divergence right here. and you can see that that was the start of the great financial crash when that showed up. We also had negative divergence start to show up right here, right in the 2015-2016 time. There was no trend line break or anything. And then we have big negative divergence that is in place now. But the difference between all these negative divergences and now is we have the trend line break. So the trend broke right here, and so that's your sell signal. And this is weekly time frame, so obviously, I don't trade the weekly charts. They're not my entries and exits, and they're too obtuse to trade. But it can give you an idea of maybe what the major trend is. So looking at that, I think that's important to just kind of keep an eye on, and we'll see how that continues to play out. But I'm not looking to be bullish until we recover this trend line and show that it can hold. Because as of now, we're trading below trend, and every time we've gotten up in this area, it's been rejected. So I think that is going to continue. Okay, let's flip over to the banks. We'll start off with XLF. We're looking at a weekly chart here. Here's 2011 lows. We had reactions here, another one there. And then we broke that trend, which is the bull trend, in this COVID drop. So that caused the financials to drop. And then we had a back test here and a full back test right here. Now, obviously, the Fed, what they're trying to do is they're trying to, pop this above this trend line. That's clearly why they waited to announce the news till Friday at the close. And so they're looking for this to pop, and they probably waited for next week being a thin week, hoping that with thin trade the buyers will step in and bid this up. But they're right there at resistance. So this is likely to gap up on Monday, and then we'll see what it does. Going to the daily chart here, you can see we do have negative divergence right there on the daily chart. And so they're likely to gap it up. I don't know exactly where they're going to gap it up, probably 2-3%. And so it'll look something like this. We'll be up in this area, and then do the sellers step in. Expect the morning for the buyers to be there in the morning, because you're going to have shorts that are, covering. You're going to have, stop losses being triggered on shorts. And you're going to have headline chasers that are thinking it's all clear in the banks and they're going to be buying. But that doesn't mean that that's how the day's going to close. So let's wait. I'm going to wait for a daily close to see where this closes. I think it's likely to close probably right on the trend line. I think they'll probably keep everyone guessing and not any major moves. But obviously it can move higher throughout the morning and then sell off in the afternoon. So again, wait for the daily close to give you an idea. And one day doesn't mean that it's instantly going to be a recovery. Look for the nature of that day as well. If it closes just up here, just slightly above, and there's not a really strong bid in the banks, then that's not necessarily a breakout. Yeah, it is a breakout above the trend line, but breakouts you want to see breakouts just like sell signals. You want to see them impulsive. You want to see strong buy, lots of buyers flooding in, buying these things up. And so look for that, and just look for the nature of the candle. On the PPO, you can see on the daily, we had the bearish crossover right there. So we've got negative divergence right here where we made slightly new higher highs right in here and making lower momentum. So bearish technicals, and they're gapping it up right into the resistance area. This could be the stop rate area, and then we sell off. Okay, JP Morgan, this one's interesting because JP Morgan, I saw the after hours, the aftermarket was moving it right up to around the $26 level. And so I was looking at the trend line that I had on JP Morgan and really going back to the 2009 lows. You can see on the daily, you held support here, kind of chopped around a little bit through here. But ultimately, and this was a big, let me zoom in on this candle. You can see that a big tail down, or I don't know, they opened it low and then they bid it up, or it sold off basically throughout the day, and then they bid it up. I don't know what happened on that day. Flash crash is what it looks like. A little bit of chop through here where you weren't exactly sure what was going on. And then another reaction right here back in 2018. And then we broke the bull trend in JP Morgan here in the COVID drop. And we had a full successful back test right here. And then as you move up, you can see that we're right. We've been trading recently right in this area. Well, they're going to gap it up. It looked like around 26. So we'll see what Monday brings. But that 26 is basically right here, right in that level. So are they going to gap it above 26, and is it going to be bid up? Or does it gap up at 26, chop around a little bit, probably ramp up a little bit into the morning, maybe up to around 28 or so, and then does it fail? That is something to watch for because it's gapping into major resistance on this chart. So I think it's likely that move is, that's the area where it's a pretty objective to get short this thing. And I might actually do that. I might get short on Monday. I'm already short Citibank, so I'm going to likely be down on that one, but I could, establish a position here in JP Morgan. I'm going to see how it opens. But again, looking at the technicals, bearish divergence right here. You can see that bearish divergence intact. It's not going to be taken out even on Monday. It's going to probably look something like that. On the PPO, as I zoom in here, we had a bearish crossover right up here. And they're gapping it up into major trendline resistance. That is the kind of the bull market trend. So I think it's likely we get rejected. Look for, little pops above the trend line. When you get so close, you're going to pop it a little bit, run some stops. But it doesn't mean that it's the start of a new trend or you're going to reestablish the trend and take off to the upside. Although that could happen. So we'll just have to wait for Monday and see how it trades. I'll probably wait on JP Morgan till later in the afternoon to figure out what kind of trade I want to take, if one at all. But let the morning action kind of clear out, and then I'll likely wait to see what's going on there. Lots of things going on here in Citibank. So clearly on Monday they're going to gap it up, and they're gapping it. It looked like they were going to gap it up about 5%, maybe 6%, but it was down 1.5% on Friday. So, net, 3.5%, going against me basically. So that's well within my, within my parameters of risk. When I'm looking at swing trades, you have to have a little bit of, you got to give it a couple percentage points, 5-6 percentage points, because you're trying to catch a large swing. This isn't day trading where I take humongous size positions and 1% can just wipe you out. This is swing trading, so I'm looking for a trend, a larger trend. What's this going to do? Well, I think that it looked like they were going to gap it up around the 62 level. And so that is going to be popping right up in this area. And I talked about this in my previous video. Since we're so close, I said I think it's very probable that they will pop it and run some stops up in this area. And so that's what it looks like they're going to do. So I'm not really surprised. It's not so much the headline that I'm surprised. It's, I was expecting maybe them to pop it up in this area and run some stops. What do we have on this chart? Well, rolling back to 2011. If I go to the weekly here, I'll show you the bigger picture. So here's the weekly, and this is really when the trend started to be established back in 2011. So we held support here, kind of held it right in here, held it right in here. There's another tag. And then we broke above it just recently, but it got rejected right around the $62 level. So you can see right there, the previous week, we were rejected right at that $62 level. And now we're back there again. So they're gapping it up into the $62 level, which seems to be some major resistance. That was the area that was rejected before. And then you can see also on the weekly, there was, basically it held as resistance right in the area. There held as resistance right in here. And then it finally broke. And when it broke, you see that week, see the impulsive, that was an impulsive buy signal, a strong green week. And then when it came back down, you see the break, a big impulsive candle breakdown. But throughout here, it held as support again. So it was support, support, support. And then it was resistance. So I think it's likely to be resistance again. Let's look here at the daily. On the daily, you can see that we're basically on the RSI. One thing to note, yes, there's negative divergence on the daily. So that's clearly there, and you can see here on City. And also, we're right around the 65, so we're not fully overbought. 70 is about overbought, but we're in the area where we're, you know, pretty overbought. So to move up into this major resistance by being overbought, you know, it's not like we're oversold or even, and then we're hitting this. We're actually moving up into this in a pretty overbought state with negative divergence. I don't think it goes much beyond the Monday gap open. I think they're going to gap it up. It's going to run up maybe a little bit in the morning, and then it's going to hold and you know, hold right around that level or sell off. And I don't think it goes much beyond that. Looking at the PPO, bearish crossover as well. So there's all kinds of bearish setups, and it's just gapping up into major resistance. Again, stocks move into resistance. It's okay that they do that, and that's usually, you know, usually the headlines, when the headlines make things seem the most bullish that they could be, is oftentimes the kind of the opposite, and it's like the perfect entry for bears. That happens a lot, where you'll see like a good earnings report come out, and everyone who's chasing that earnings are actually going long in what is the possibly the worst time to go long. So chasing headlines is, you know, oftentimes gives you that, and that's what I think we're going to get. I think we're going to get a gap up. We'll get some headline chasers. We'll run some stops, and then we'll start to roll over. Okay, that's really all I got for this video. Just a couple stocks and talking about the banking sector. And we took a look at the general market. So again, I think the markets, you know, we can roll back to the markets real quick. The markets haven't broken. They are still, we didn't get that breakdown that we were looking for. So I'm still looking on the triple Qs for an impulsive break of this 309.40. I don't know if it'll come next week. It's a pretty light week next week, so low volume. It's likely to be pretty choppy. We did break this bearish rising wedge here, and so I think what's likely to happen is we just drift around sideways, and then in January we get that sell signal. But until we get it, we could drift higher. And then on SPY, again, here's your trend line, your channel. Have not broken that. On Friday we just came right down to it, and then they bid it up into the close. So until you see a breakdown of this and you see the breakdown of the Qs, we don't have a sell signal yet. So just continuing to wait for that. That's all I got, guys. Thank you. Catch you on the next one.